Hello, very good evening. My name is Vaibhav, and today I am presenting my capstone project work in the course Advanced Business Analytics offered from University of Colorado Boulder under Coursera platform. As a capstone project activity, I got a task of analyzing a data set of a finance company whose name is Lending Club, which is supposed to issue loan to the borrowers invested by different investors. So let us begin with this presentation. I have given the name Portfolio Investment Analysis for this capstone project. Now here is the brief description of the analysis requirement. The task requirement is that the investors are interested to invest in Lending Club. This is the name of the company to lend their money to the different loan borrowers or seekers in order to get higher returns compared to alternative investment. So here the lending club is acting as a platform to those investors who want to invest their money into different loan seekers in order to get maximum amount of return. When these investors are investing their assets, they are also exposed to the risk of loss in this particular business. The loss tend to happen when the loan borrowers tend to default their loan. Okay, otherwise the investors are going to get their return as they expect. The investors are also interested in understanding the quality of loans that they are lending to the borrowers through lending club platform. The investors also want to predict the typical annual return on their investment, and they want to know the best allocation of their funds to the group of borrowers. Investor, they also want to maximize the return on the expected business. Okay. So for this particular analysis task, the steps are shown in front of you. So typically there are 4 to 5 steps, and these steps I will explain. First task is to perform the descriptive checks on the received data. Then second step is to use the classification technique to classify the borrowers from the point of whether they will default or they are regular type or non-default type. Third step is to make use of a prediction technique to estimate the losses which will be incurred from defaulters. Fourth step is to build a simulation model to find out the total expected return at the completion of 1 year on certain investment which the investors are going to do on the different segments of borrowers. And finally, the last step is to build an optimization model to achieve the maximum return on the investment based on the calculation proportion of or calculated proportion of investments in each type of the cluster. Now let us see these steps one by one. In the descriptive analysis, as you see, there are some missing values are found in one of the column and multiple outliers are found in multiple columns. These issues are handled with replacing them with the average value of the columns, their columns. And one interesting fact we observed from this preliminary inspection is that the default borrowers, they do cause more average loss to the investors than compared to the other borrowers, which tend to cause average gain to the investors. Now, next slide, the task is to identify the bad type of loans using classification technique, right? So the bad type of loans, we used to call them as a charged off category in the data set. The classification is performed with analytic solver platform using multiple classification techniques, and the results are presented in the tabular form in front of you. We compared four different models of classification methods, and we found that the logistic regression classifier with k-fold cross-validation technique is identified maximum number of default borrowers, or what we call it as a bad loan types. Okay. For classification, the technique used the metric of confusion matrix and area under curve. And from this comparison of four different methods on the left hand side, we see that the logistic regression classifier, the fourth type, with k-fold technique, it is able to achieve the area under curve maximum to 100%. And therefore, we conclude that the best classification method to identify the bad type of loan is logistic regression with k-fold cross-validation. Okay. On the right hand side, we also observe the graph of confusion matrix where the zero category indicates the fully paid class and the category 1 indicates charged off class. Now the class of interest over here is charged off class, which this indicates that these are the default borrowers, right? Now let us go to the next task, that is to accurately quantify the amount of loss which will happen because of the bad loans or defaulter borrowers to the investors. We used again here the ASP platform to predict the loss with several different regression techniques. Now these methods are compared to get the maximum accurate prediction of the loss value. From this table, we observe that the regression tree with ensemble bagging using linear predictor provided the best result overall with root mean squared error of 2028.36 and R square value of 89.4. Therefore, we recommend to use this algorithm in order to accurately predict the losses that will cause in this business to the investor because of the bad type of loans. Okay. Next slide is very important. Here we are going to classify, or rather we are going to segment the customers, the borrowers, customer here are the borrowers, into different categories based on their identified characteristic. Okay. I use the clustering method to divide the loan borrowers into 5 distinct groups. Okay. And these groups are, we are going to call it as the clusters, and they are shown in the tabular form. The important characteristics of borrowers are categorized under one unique cluster are highlighted in the second column. Okay. Now from this second column, we observe that cluster 1 type of loan borrowers, they are found to be most loyal for their loan repayment, while cluster 3 loan borrowers, they are found to be most defaulters. It is recommended that the investor should focus more to invest in cluster 1, cluster 2 and cluster 4 groups for their investment, as these clusters are most favorable to provide maximum return on investment to the investors. And the investor must also understand that they must avoid spending their fund allocation to cluster number 3 and cluster number 4. Okay, next. Now this is again important slide. Now here we ran a simulation to find out the total expected return on $2 million investment done on each of the 5 cluster groups. From this analytic solver platform simulation, we found that the total expected return after 1 year span is found to be negative 0.13 million, and the chance that the return will exceed a half million is within 1%. This decision of investing $2 million equally to each of these 5 clusters is found to be a riskier decision to the investor from this simulation model. And finally, when the investor wanted to allocate total $10 million to all of the cluster groups, and they wanted to know the proportion with which they should allocate $10 million dollar funds into each of these clusters. For this purpose, we ran an optimization model to maximize the return on investment. And it is found that after 1 year, the optimization model has returned us the total 0.254 million with a Sharpe ratio of 1.2247. The positive Sharpe ratio indicates that the investment done in a different cluster is performing good. And we advise to the investor that they should invest 2.688 million in cluster 1, 3.617 million in cluster 2, and 3.694 million in cluster 5. Okay, and this total allocation will get added to 10 millions. And they should also note importantly that they should not invest in cluster 3 and cluster 4, as these groups are found to be more risky towards causing the losses to the investor. Thus, the overall analysis of the investment portfolio for the investor is presented in this brief presentation. The investors are also advised to follow above guidelines while making investment in different cluster groups. This analysis will be highly helpful for them to make decision of fund allocation in different clusters. I hope this brief presentation is enough to give an overall idea about the fund allocation. This analysis will facilitate the investors to help themselves in making correct decisions about their fund allocation. Thank you very much. And I thanks to the University of Colorado Boulder faculty and tutors for giving this opportunity to complete this capstone project. Thank you very much. Thank you all.